Hey folks, hope you're doing well today. It is Saturday, July 25th. I just wanted to reach out and do a little Saturday video for you guys today. I'm going to go over in this video a few little nuggets of information that I received from a friend who also trades NASDAQ futures, and he's been trading for a lot longer than I have and generally has some greater insight into what works and what doesn't. So in this video, I'm going to go over 3 or 4 things that I learned this week about trading the NASDAQ futures. Let's do it here in today's video. All right, guys, subscribe if you like my content. If not, I don't care. You can get out of here. All right, just kidding. Tip number 1. This is going to seem pretty obvious, but it's remove all distractions from you. That means remove Discord, remove your cell phone, remove your news feed, remove everything. Okay, I think in regards to a news feed, definitely keep an eye on it in the morning before the session starts. But when the session starts, your attention needs to be focused on one place, and I don't even think I need to say it. It's on the tape. That's it. Remove all distractions. And the second part of that is going to be minimize your trading layout. All right, guys. And this is a great problem among a lot of traders. In fact, it's the fact that we have too many things that we look at on a daily basis. We don't just sit there and look at one thing. We look at 4 things. We look at 10 things at once. Okay, you got one chart there, you got one chart there, you got this and that. So what I've learned is that if you want to make money, if you want to be consistent, you have to minimize the amount of things you look at. That's it. And honestly, this layout, which you're seeing in front of me right here, I've even changed this. I changed this yesterday because I realized that even this is too much, because I'm focusing on too much on the chart. Because I'm so used to trading the chart over time, I've grown too accustomed to using the chart as a main source of information. But in reality, once you get used to reading the tape and reading the dome, you learn that the chart is actually very unreliable and that the chart will actually fool you a lot of the time. The chart should just be a reference point, in my opinion. So once you learn how to read tape, that's where your focus has to be. All right, so look at the straight in the middle of my screen right here. This is the tape, and you're going to see these are the time and sales transactions printing, okay? And I have these filtered out to show only certain sizes and above. But generally, what I'm going to be doing going forward is only using the charts as a reference point, and the majority of my focus, it will be, in fact, on the tape, on the dome. Okay, so guys, those are my first 2 points about the video today. Number 1 was remove all distractions when you start work. And number 2, it's focus only on the tape and focus less on the chart. And this is going to be tough because the majority of new traders, when you start learning about trading, what do? You learn about a price chart. You learn about technical indicators. You learn about how to read the price chart, the volume, and all of that. But guess what? That information is not going to be as reliable as the one you're seeing printing on the tape. And this is what a lot of traders don't realize. You cannot see what is happening on the tape on your chart. You cannot see how many sell orders took place at 408 just now right here. Now the price is trading at 418. You can't see how many traded down there just now, but you could see it on the dome. You can see it on the volume profile. All right, so these are things you got to see. All right, if you want to gain confirmation in your trade, you need to keep an eye on these low volume areas and keep an eye on how the price is trading when it comes to those price extreme points. You can't really see that just on a price chart. That's why the price chart needs to be used as a reference point. And that's what I'm focusing on going forward from here, guys. So yeah, of course, I still pay attention to charts and technical analysis to a certain degree. Like if you look at a chart on an hourly or 4-hour or 6-hour chart, and that in combination with a volume profile will definitely be able to give you a lot of insight into your market, okay? But when it comes down to the nitty-gritty of doing the trading work and seeing who's interacting in these markets, it's all about reading the tape. At the end of the day, you got to sit there and read the thing. Read what is happening. Be patient and read the tape. That's what I keep saying, and that's what I keep not doing. So yesterday, I had a red day, except now I'm showing a nice green trade on the screen here, but I had a nice red day yesterday, mainly because of the fact that I was not even reading the tape in the morning session. I was oblivious. I was sitting there, I read it for a little bit, I saw a couple things, and I put on a trade. Done. But I didn't read the tape. Reality of the matter is you got to sit there and read the tape for the first 15, 20, 30 minutes of the market open, the cash open, I'm saying. Because when you do that, first of all, you're training your eyes to get used to reading it. You're training your brain to get used to reading the tape and understanding the flow of the market. And you're also training yourself to not act impulsively on things that come to you, okay? Because remember, whatever market you're trading, NASDAQ especially, is very erratic. You're gonna get a lot of these random moves out of nowhere, these little sweeps, drop the bids, lift the offers, do something crazy like that. And this stuff will get a lot of retail traders to react impulsively and enter trades. And that's the kind of stuff that will set up the traps that will give you those high probability trades. But the reality of the matter is, in order to become a part of that opportunity, you need to read the tape to gauge the overall action, not just 5 minutes of action. You need to gauge the tape over 15, 20, 30 minutes of action, okay? If you're only gauging your trading decision based on 3 minutes of tape, you're not really seeing the whole picture. That's what I'm getting at here, okay? So reading the tape, sitting there, just dedicating time to just sit there, be patient, and read the tape. In this case, stand here because I prefer to stand. It's just a more professional environment. Read the tape for the first half an hour and just sit here and read the tape. There's nothing else to say about that. So that's going to be me going forward for next week. Just definitely putting a lot more attention onto just focusing on just reading it, because when you read it, you see the behavior taking place. You see the retail traders getting involved in the market, or where they will likely get involved in the market. And all you need to do is look at it in the sense of, so first of all, it's where are the impulsive price moves and where are the price extremes? Because remember, price extremes on the volume profile give you a good indication of support and resistance. And we're going to get to that next here. But the impulsive moves, first and foremost, is going to be a great indication, because humans make decisions on impulse. When we see it, we do it. I see it, I like it, I do it, right? That's the natural human reaction. And as a person who seeks opportunity from the sidelines, you need to be able to perceive when these things come to fruition. And that means sit there and don't trade for half an hour in the first 30 minutes of trading. Next part of the video. Okay, so I just want to say a couple of tips that a friend gave me regarding trading the NASDAQ futures. Here we go. Filter out on the unfiltered tape. Filter out the 1 and 2 lots for the NASDAQ futures. For me, that has been a great change in how the flow of the tape reacts, because when you can see there's lots of buy momentum, you want to see a lot of these 3 and 5 lots confirming the direction, because the 1 and 2s really mean nothing. If you're seeing 3 and 5 and 8 lots, that's generally what's going to be there to move the price, because if you look at the depth here, you can see a lot of the depth is just like 3 to 7 lots per price. So if you're seeing a lot of those prints taking place, you're going to see downside bias. So take a look at the tape right here. Look at this downside bias. You see a lot of these 3 lots, 6 lots, 10 lots, and now they kind of stop, and then they're continuing. Look at that, they're continuing. So there we go. So that's downside bias right there. You saw all of those prints come through. So definitely filtering out the 1s and 2s for the NASDAQ contract, that has been a great indication. So in regards to tape reading, that's something I implemented this week, and I noticed a big difference. But again, I wasn't even reading the tape. So that's part of the reason why I traded badly yesterday. But if you read the tape, you will see what's happening. Anyhow, the next point I'm going to go over is regarding the volume profile of the market. So generally, something I learned recently about the volume profile is that you have to use the volume profile in a way where you're identifying the extreme points of the market you're trading. So looking at the NASDAQ futures here, this is a 2-hour chart, for example. What I learned recently is the fact that in regards to the volume profile of the market, you need to pay attention to how the price is reacting at the extreme points of the profile, and this applies to multiple time frames. So looking at this 2-hour chart, of course we're in somewhat of a trading range at this point, but you can see that now we're nearing the lower extreme of the profile, and there is a low volume area here. So the low volume areas, they call it low volume node, this is going to be the areas that you need to watch how the tape is reacting. So if we're coming close to a low volume node and we're not seeing notable conviction in the direction, it could be signaling a potential reversal, because remember, low volume nodes signal prices that traders are not looking to do much business, or not much business occurred there prior. So that tells us that potentially that could happen again. So if you zoom in on a 15-minute chart, you can see here that this whole area has a lack of price history, because once we moved below this 760 area, it seemed to be just a waterfall, and there was just no liquidity here to support that price. Nobody wanted to step up and support that price at this point. And then we start to accumulate trading in this price and in this price. So you're going to see these extremes of the profile are going to give you good indications of support and resistance, okay? So when you draw a line on your chart, in my opinion, your line means nothing. But when you see a low volume area on a profile, in my opinion, that gives a much better indication. So if you look at the trading of yesterday on the NASDAQ futures, you can clearly see that when we moved up to these 530s and didn't see notable conviction, that was in fact our low volume area. We caught a bit above the 500s, and then after we started to fade, and guess what? We faded right back into our general trading range. So that's an example of a failure approaching our resistance, staying within the trading range, okay? Now, for example, if we came up to that low volume node and we started to see the bids holding, and now we're seeing sellers getting absorbed into the bid and we're seeing slowly higher prices, that's a sign that we could potentially break up into this next volume area and we could be seeing a potential continuation. You know what I mean? So these low volume areas, they represent what my friend calls them battle zones. So areas that you need to watch the tape to see what's happening. So if we come down to the low volume node here around the 368s, we see a swift move down to those prices, and then all of a sudden we see that nobody wants to trade down there. That's a sign that you probably want to get long in face of that move. But again, it depends on the market you're trading. NASDAQ is known for fake outs. You might get a swift move down to the low volume area and then a little retrace and then another huge move down into the profile just to sweep out anyone's stop losses that thought they were getting on board quickly. And then you're gonna get the real move back into the profile, okay? So again, using the volume profile to identify levels of support and resistance, that right there is a game changer, okay? And it beats drawing a line on your chart by a mile. Now, this is nothing against technical analysis, because you know that I'm a fan of technical analysis for understanding your trends. If you look at any chart, using technical analysis to understand daily trends, hourly trends, 5-minute trends, very useful. But using that in combination with a volume profile to identify where traders are doing business and where they're not doing business, in my opinion, is superior. All right, guys, so that's going to be pretty much it today. So I gave you a few tips regarding my process, and take it or leave it. At the end of the day, nothing matters anyways. So if you enjoyed the video, I wish you a great day, and I will see you tomorrow. Take care, guys. Bye.